Hi everyone. So for today's video, I'm going to be analyzing a once powerhouse Canadian tech company most of you will be familiar with, BlackBerry. BlackBerry has made substantial gains as of late and is popping up all over investors' radars. I'm going to be looking at why this is by analyzing BlackBerry's current and future business operations, their balance sheet, and at the end of the video, I'll be giving my own personal opinion about whether BlackBerry stock is currently a sell, hold, or buy. BlackBerry was once at the height of business and personal phone distribution, as well as their software implemented through a wide variety of sectors. Its all-time share price high was recorded in mid-June of 2008 at $147 USD. Later, just that same year, they saw a major downfall in September and October, which lay in conjunction to the global financial crisis. This was compounded by a revolutionary company rapidly gaining momentum, Apple. Apple basically knocked BlackBerry off the face of the planet. Within 4 years, BlackBerry's share price fell over $100 USD in value into the single digits and has essentially stagnated there for about 8 years. The Canadian representation in the world of cell phones was essentially just gone, KIA. Comment F to pay respects, start an F chain. BlackBerry has continually tried to reformat their business model, appealing to new customers and getting into different new markets. But for the most part, the damage had already been done and their business and brand really took a major hit. If we zoom into today's share price, it's hovering around $5 USD. And then since about mid-March, we can see that there has been growing interest in BlackBerry stock. It hit a low of $2.90 per share and has rebounded as high as 81%. So I'm going to dive into their business sheets, their current and future operations, and find out why this is, why the stock price has increased in valuation so much just over the course of a few months. I'm also going to be assessing whether there's any long-term viability to this, if the share price can stay, and if it can grow. So to begin with, value investors and growth investors will be all over BlackBerry, as there is minimal risk if you just want to buy a few shares as they are so low. So maybe, take a weekend off the bar, put that money towards BlackBerry. You don't really want to be putting your life savings into this stock. It is quite risky as it is almost a penny stock. So one of the primary reasons that BlackBerry stock has continually rose and increased in valuations over the past few months is recent rumors suggesting that BlackBerry is looking to be acquired. These rumors of an acquisition deal have injected some life into the share price. It's important to note that rumors of an acquisition have been long since circulating through BlackBerry. However, these are really ramping up in the past few months. It's also important to note that if BlackBerry was acquired by some other larger company, this share price would be capped, as it's likely that an all-cash deal would be transacted. Therefore, for investors looking for only long-term investments, BlackBerry is probably not the right investment for you if it is being acquired. If it's not being acquired, we'll delve right into that and see if it is. BlackBerry investors have also gained confidence in the company under the new direction of CEO John Chen. Chen has diverted BlackBerry's business operations to focus almost solely on cybersecurity. This has put them into a really unique position as the world continually moves online, people continue to work from home, and cybersecurity and security and privacy become the utmost importance, making it a very good time to be a cybersecurity company. Relatively speaking, BlackBerry has a solid balance sheet. They're a mid-cap company with $2.93 billion in outstanding shares. If we look at their revenue growth year over year, you can see a growth of about $100 million, which is definitely a good sign. It's what you want to see. And also an increase in gross profit of $65 million. Less ideal is their operating expenses, which have also massively increased, almost to $200 million year over year. This may suggest that they are ramping up advertising, marketing, and distribution. This may also hint that the company is trying to rapidly expand in their new sphere of cybersecurity and reach new markets and gain a foothold in the cybersecurity landscape. Their net income after all other income and operating expenses was actually a loss of $152 million. They did report solid net incomes in both 2018 and 2019, so this loss may be partly due to the global health situation, as they likely incurred huge revenue hits in December, January, and February in their Asian operations. They reported a profit profit margin of negative 14.61% and a return on equity of negative 5.89%. They do have quite substantial cash holdings of $909 million, so they're relatively safe for the short term, although they can't long term sustain this hemorrhaging of cash. If we take out the liquid cash from the market cap, we get about $2 billion, therefore they're only trading at about 2 times revenue. Their forward PE ratio is sitting at about 111, which is really high. However, it's quite average for the tech sector. It has a price to book of 1.22, indicating near fair value, and their current ratio is 1.07, indicating slightly more assets to liabilities. Another reason that BlackBerry's share price may be increasing is that they're increasingly focusing on future business operations in the autonomous driving sector. They recently announced a new $310 million cash injection into their QNX platform. This is the platform that focuses solely on autonomous driving software and technology. Also, the government of Canada has agreed to inject $40 million into this QNX system. QNX is also leading the charge on vehicle-to-vehicle communication, which is seen as a major component to actually getting driverless cars on the roads. There have been many buyers to the BlackBerry's QNX system, and I can only see this really increasing as more driverless cars get on the road. Just as I previously said, it's a great time to be a cybersecurity company. I think this also definitely applies to an autonomous driving software company. Some projections state that 15% of all cars sold by the year 2030 will be fully autonomous, and I can only really see this exponentially increasing over the coming years and decades. The potential acquisition from a larger, more stable parent company, the great management led by CEO John Chen, the realm that they are currently delving into in the autonomous driving sector, and their focus on cybersecurity, I think personally makes BlackBerry a buy for the future. By no means am I saying this is not a risky stock to buy. It is definitely risky. It's a very speculative buy, and that's important to know. The stock will see more downturns, it will see more upturns. It's going to be very volatile in the short to medium term. Even if a potential acquisition isn't struck, I do see BlackBerry as a viable, stable, long-term company. They've kind of been through it all. They're an older company. They know what they're doing. I think CEO John Chen is a really good management figure. He really knows what he's doing. I trust his decisions. And I can see Canadian tech growing in the coming future years and decades. At the current low share price, I see the reward outweighing the risk. This doesn't mean to just throw your money into this. This is a very speculative buy. I cannot stress that enough. Any stock really that is this low is extremely risky. There's high risk associated with it. So just be prepared to maybe not see that money again, maybe see low yields, maybe see no yields at all. Do your research if you are going to invest in any stock. Don't just listen to me because I'm saying it. It's important that you do your own due diligence, do your own research, and figure out whether or not you think BlackBerry is a buy, sell, or hold. For me personally, I'm just going to allocate an extremely small percentage of my portfolio into BlackBerry shares just because I do want to be exposed to that potential acquisition, and I do think they have a somewhat relatively long-term viable operation in place. Anyways, guys, thanks for listening. Thanks for watching. Go hit that subscribe button. Go hit the like, comment. I don't know. Do whatever you got to do. I'd really appreciate it. Hope you learned something. Hope you enjoyed something. And take care. And I'll see you next time. All right.